Hey everyone, happy Monday. We are here again to talk about Mortgage and Market Monday in Northeast Florida, the Jacksonville, St. Augustine area. And I'm Tracy Williams with the War Group brokered by eXp Realty. And Joe is here again. Hey, Joe.
Hey, Joe Versput or Joe V with Two Navy Vets Mortgage Team at Future Home Loans, a local mortgage broker, veteran owned and operated.
Joe and I were talking about first-time home buyers, and I love working with first-time home buyers. I just closed a deal today with one, and she happened to be active duty as well. So she was using her VA loan. But, the cool thing about that is, I asked her, I said, well, why did you decide to buy? And she goes, well, because it didn't make sense for me to rent because I'd be paying somebody else's mortgage and at least I'm getting some equity. My parents had taught me that and she's young. So I was really proud of her.
Wow,
I love it. Yeah. I'm like, that's exactly the reason why you would buy. And, her credit wasn't off the chain. It was just a normal credit, but fortunately, she was able to utilize her VA loan, which not everybody qualifies for VA. And we work with all kinds of first-time home buyers, that utilize conventional or FHA or VA, or some. We do have access to some USDA, not that many.
There are so many programs for first-time home buyers. It's you could get lost in the sea of them and the different nuances of each one. That's why you really kind of gotta talk to your loan expert and then take it from there.
Yeah, absolutely. So that's what with her, she ended up having zero to bring to closing. So she didn't have to bring a check. Most of the time, especially with VA, our buyers end up getting money back at the table. I was able to negotiate 3% of closing costs in, as well as she was able to utilize the down payment assistance. So that covered all of her down payment costs and that kind of thing. So not everybody qualifies for that, but that's why we're kind of here to talk about first-time home buyers. So what is your first step for buying a home is the question I get asked, all the time. But let's step back for a minute and see really what do first home buyers need to really get the ball moving, and making that decision to go to that next step from renting or living somewhere and paying somebody else's mortgage to purchasing a home. And what does that look like? Well, I'll let you start from the loan side, because I know from the real estate side, we have that initial conversation. A lot of times it is with a realtor. But, at the end of the day, it really has to start with you.
Yeah. And there's a lot of paths to get to me. I mean, I guess technically pre-approvals first, but in the choosing your team and, you're not wasting your family's time talking and looking on internet sites about, what homes you could or couldn't buy, and maybe that's the right or wrong one, and you're just kind of not really getting the right information to make a correct financial decision. So once you talk to the first call with a client, it's 15 minutes, and then we get an application in, and we can really give you some really accurate numbers and a good target to shoot for. You're looking at a $350,000 home that you can afford, but you don't have a pre-approval letter. And then it's, we've got some self-employment involved and have to take a little bit of a deeper dive. You could miss your home. So you get that pre-approval letter and it's ready to whack the mole when the mole pops up, and you don't have to take a step back and possibly lose out on your dream home kind of thing. And then once you get the pre-approval letter, then we get everyone back in the team vibe and communicate, hey, Tracy and team, this client is now ready to go ahead and take a look at some homes with you this weekend and set up some, schedule some viewings with you, kind of thing.
Yeah, exactly. That's a great way to put it, because a lot of people go, well, can I really afford a home? Well, you won't really know. I mean, we can get a general idea. And usually when I'm talking and I'm working with buyers, and having that conversation, I ask them, what is the amount of the mortgage that you can afford to pay, and stay within your budget, because it really does matter. And and they're like, well, I can do this and this. I said, well, does that include your insurance and your taxes, or do you need to add more to that, or is that just it? because that kind of gives me an idea of kind of where we are roughly, after seeing so many different kinds of loans closing, what price point we're at, and but always the first step to home ownership, I tell every buyer, is to get a pre-approval. First, make the decision that you're even willing to try and look at the situation. Because, if you're trying to build generational wealth, and as a real estate advisor, that's something that I always look at. Let's look at going that next step, and get that pre-approval done.
And on the pre-approval portion, I've been doing this long enough that I would hate to have someone go out and sign their name on the line without having everything possible flushed out financially and covered and cleared up. So you don't have to do anything but collect the documentation and hand over the keys at the closing table after you found your home. So we pull your credit, and a lot of people say, oh my gosh, it's a hard pull. That's a little bit of a holdover. The CFPB can passed a law that is in your favor to get your hard pull, won't affect you much, and have a window to shop in so that you can not be hard hit every single time. And usually the people that, with lower credit, when we have that first initial call, I might not send them to application right away because, we don't want to pull your credit if you don't have a shot. That's when it does start hurting, is when you shop can you hear my dog barking in the background? That's when, Frankie, that's when it does start affecting you, is when you get it pulled every month over and over. It's really sad for people to kind of have to change gears because they were so afraid to pull credit till late and wouldn't let us. I've been through that where I let the client kind of run the show in my youth, and it ends up worse for them. So now, if you want a full pre-approval with Craig and I, we're going to do a hard credit pull for it, and even collect as much documentation up front as possible. So that way we can, when you're negotiating on a home, you look at the seller, if they have an empty home, they don't want to hold an extra month's mortgages. So in your negotiation, a 30-day closing is a feather in your cap. So, hey, you don't have to hold an extra month's of payments because we can close it in 28 days or whatever, kind of thing like that. And then, usually your realtor and lender, you really want a nice synonymous, synchronous relationship with each other so that they've worked together. They can pick up the phone.
Buyers want to they think the first step is going and finding the home. And that's so far from the truth because, like you said, if you don't get your pre-approval and, you find that perfect home.
I just thought of a great analogy, like real time with this is it's like going and filling your shopping cart at the mall and then forgetting your credit card and having to leave everything there and drive back home and then go back and get your credit card. And then they sold everything by the time you got back. So you're not going to get what you want. There's no cost to get the pre-approval. There's no cost to choose your team, get your credit pulled. That's all at the closing table or during the process with some of the third parties like inspections. But just to get checked out and get a financial checkup and get a pre-approval, that doesn't cost anything.
Yeah. So this is a new year that we're getting ready to start into. So a financial checkup with the mortgage process is really a good idea for anybody that's going to buy in 2024 because and is it too early now if you're planning on not buying for another year? No, it's not, because what you guys can do is give that path that they need to get us, get them ready for purchasing. And that is, because sometimes everybody's credit needs a little bit of help. Sometimes paying off certain things or not paying off certain things will help or help or hurt the credit. And a lot of people don't realize that part
especially
of it.
Especially on conventional loans where like the scoring for rates and the government loans is a little bit different than conventional, even more so if you saw those pricing adjustments we just went through with conventionals. Depending on how much you put down, the loan size, when you drop below 150,000, you might as well just get a $150,000 home because they'll just tick your rate so much that, they're really every 20 points, they're going to raise your rate, so you're looking at $100, $200, $300 a month more every 20 points or credit or so, depending on the home size. So whether you can or cannot do the loan in the 500s, which we really can, it's so much better to get way ahead of it and give us a few months to look at your credit, take a snapshot, get an idea of what would happen if we maybe move the credit card, close this one, paid this off. Sometimes it does not make sense to pay off collections and all that stuff. And that way, when you do get a home, you can afford that home that you wanted because you don't have a higher rate with the lower credit, you know?
Mm-hmm.
So
Yeah,
just getting
exactly.
ahead of it financially.
Right. Well, talk about fees that, buyers will incur, because a lot of times they are not aware that they will have, certain fees that will be due at some point. And, and they, especially with these down payment assistance programs or closing cost help or that kind of thing, there's just a lot of misinformation out there. So, usually when you submit an offer, on a home, you have what's called an escrow binder. And that's your deposit that goes down, saying that you are really have skin in the game and you're moving forward to purchase a home. That escrow binder actually acts as a deposit, but it comes off of your total at closing. And so, if you have, just say, $100,000 purchase, and your loan amount is $95,000, and you've paid $5,000 down, that means you have zero due except for your closing costs and prepaids. So that's where sometimes getting those sellers to pay for some of your closing costs and prepaids is going to be super helpful. But then when we go into the transaction itself, we're going to have to do inspections of some kind. So let's talk a little bit about inspections and what is kind of required for different loans.
Yeah, every different we could get lost in the weeds with the different kind of things for each one. Government loans, as just a spectrum of government loans, have one kind of set with some nuances in the middle. FHA, VA, USDA are all government-backed loans. Conventional has another kind of structured set of it. Inspections are going to look for the house to be in working order. So you're looking at a full working home, roof, all the utilities, functionality of all the stuff that's there. The wood rot a lot with like the VA loans and FHA, chipping paint. Inspection of each style loan has its own thing, but really it's just a good working order of the home. We get an inspection report or an appraisal. So you have two different things. You've got the home inspection and you've got the appraisal, which is tied to the mortgage. The home inspection is nice and it's required. Because if you have any worries, like especially in historic areas where they have all these foundation issues and people are really skittish about signing on something, Tracy, you're never going to let them sign a contract that doesn't allow them to back out within that 10-day inspection period.
Correct.
So we do that right away. We order the appraisal right away so we can get all of the home quality assessments done and sent to us, and so that the client's best interest is looked out for. And then if something's wrong and they can't negotiate to fix it on the seller side, then we can back out.
We always make sure that the buyers have that opportunity to do due diligence. And, that's where a seasoned realtor comes in, because I have recently even had another agent who requested for us to have a zero due diligence. And I was like, what are you thinking? We're not doing a zero due diligence. I'm sorry, but I'm not going to put that buyer in that position. I made it very, very clear to that buyer why that was not a good idea, for them to do that. They do that yes, their loan is protected, on a financing contingency. But at the end of the day, if you're giving up your inspection period, you're going to spend more money up front getting that inspection done, but it's a peace of mind that each buyer has when they close on that house. They know exactly what's going on with that house. And what it does is allows us on the real estate side to have the opportunity to negotiate those repairs that need to be done. And it also allows, if we do need to get the lender involved in somehow, some way, and there are certain requirements of the loan and we know which loan they're going with, sometimes we know that the lender's going to, all it takes is the lender saying, nope, we're done,
that's it.
But here's the thing, we don't, a lot of buyers go, well, I don't want to waste my money on inspections. Well, the whole goal is for us to have the information that we have about the inspection so that we can go back to the table and negotiate. That's where we go back to the mat.
I'd also gather that probably half the contracts that you see have some kind of inspection repairs or more that cost over the amount of what the inspection costs.
Right.
So like and even more, you see that the way things cost now, I mean, it's hard to fix anything that's going to show up on an inspection report for less than $800, I would say. I mean, little things, but so you're paying and you're usually recouping that money pretty much immediately because it's going to come up and they've got to fix it for it to get to closing. So
licensed professionals, that are doing the inspections, that really does, that's their expertise, and that's what you lean on them, to do. So besides the inspection, besides the appraisal is ordered by the lender, and the buyer does not have to go and order that appraisal. That's chosen by the lender, but is paid. Is that paid out of pocket or is that paid at closing, Joe?
So normally it's paid up front a lot of times.
Buyers need to, also prepare for getting their homeowner's insurance settled during the transaction as well. So from your side of it, what does that look like?
We send you some people that we like to have a good structured setup, can get it done to closing and get us the right documentation with the proper coverage. So usually paid in the escrow with the closing costs at the closing table, typically, unless you don't escrow. And you can even pay it up a year ahead of time. There's a few ways to do it, but mostly it's paid in that closing costs on the day of closing.
Okay, so for first-time home buyers, you say paid in escrow. Can you explain that a little bit more?
Yeah, escrow is an account. So your taxes, property taxes, and homeowners insurance, if you don't put 20% down, typically you have to put them in an escrow account. If you do, you have the choice to pay them on your own outside of the mortgage process. If they're due within 60 days of closing, you have to pay them at closing. Taxes in Florida are due in November, okay? And then your insurance is really set when you buy the home on an annual basis. So you're gonna pay a year of insurance and prorated the taxes plus a 3-month buffer in an account at closing. So that, and a lot of people say, well, I'm paying that with my monthly mortgage. Why do I have to do that at closing? Well, let's say it's September and you close on your home and you haven't even made one mortgage payment. Where are we going to get the money to pay your annual taxes from? So you're actually at closing, you buffer that whole account up, and then your monthly 12 out of the 12 months, every month you're putting that portion in to restock it. So when the bills come due again, then you go ahead and pay them out of that account. And then there's different guidelines surrounding that, but that's all included in closing costs, which tend to be around 3% of the home value for a primary home at closing.
That's your closing costs, and prepaids, which is generally why, as a buyer's agent, when I'm acting as that, I will go in and try to, negotiate the 3% of the closing costs to be paid by the seller. It's not always a done deal, it just depends, but there's different ways to, attack the contract and the offer to make that enticing for the seller, to do. So I think other than that, the down payment is really the only other, really fees and money that a first-time home buyer really needs to kind of know. But like I mentioned today, there are down payment assistance programs which do allow for that down payment to actually be covered and have zero due at closing, or even get money back at closing, just depending on the program. Too, but and interest rates are still down, right?
Yeah, they're coming down a little bit. It was a little bit of a slow holiday week last week, but they're, I'd say, 0.5% lower than they've been in this recent era, which is a nice time. And I figure we're probably going to coast into the holiday unless we get some kind of major announcements. Usually things are kind of steady through this, and then January will probably represent what kind of Christmas retail season in the market does, maybe.
Right.
Not sure. But everyone's got their own speculation on that. You got to be happy with the payment when you close, because if things don't change, you don't want to have a plan only in case it's good, not in case it's bad. So you got to be comfortable with the payment now.
Oh, 100%. That's all, at the end of the day, that's where it needs to be all the time. So I know what we typically do on our team is we will, get with you and we'll say, hey, we've got this particular priced house. this was the taxes last year. This is the HOA that were, or the CDD fees, or however that is plays in, because those HOA and CDD fees do have to be counted towards your mortgage and what you're going to be paying every single month. So that's why if you're, on the tighter spectrum, we're looking for those non-HOA and CDD homes, too. But, that's really where we're just we're talking with you. We're trying to make sure that, hey, where are we at mortgage wise before we even submit an offer? So we're really working with a mortgage professional. I've got to be able to call the lender. And even if you bring a lender that we're working with, I've just got to be able to communicate with them, because, that's such an instrumental part of moving people from contract to close. And a lot of people don't realize the importance of that, and having a lender that's actually going to close the deal on time. Mm-hmm. That's important, because 100%. It happens so many times where we don't close because the lender does not do enough business, or just that's not how they do business.
I mean, that's a lot of the larger institutions. That's why I've worked at large institutions, and I understand how they're run. There's just not as much buy-in to each client, because you're kind of on a widget-based system. So we're constantly saving files for people that were sent out without pulling credit. Then they go sign on the line. Then someone goes like, oh, hey, they don't know how to solve it. So, we do a lot of that stuff. We like to get the first look, because we both know, Craig and I, when I say we've seen a lot of different scenarios, but I've helped the other guy close a loan that's my competitor a week from closing, and told him how to fix it. So, we just like to be a resource and work in the community, and we're always here to help you groom any questions to get your home buying ready.
Yeah. So first time home buyers, especially, we love getting the opportunity to work with you.
They're the happiest.
It is. I know they're and it's overwhelming. There's just so many emotions that go into it, but that's why you never want to buy based on emotions. You want to have professionals that are going to look at it from a business standpoint, because like I tell every single buyer, real estate can be used to produce generational wealth. But it can also be used, to put you financially in the hole if you do it the wrong way.
Anything can be used incorrectly.
It can.
We overcame that with the points conversation, where people are like, they'd call me, I don't want a point. I'm like, I understand where you're coming from, sir, but that's a point is a tool. It's 1% of the loan amount. You could buy the rate down and have the seller pay for it, but people got a little bit sideways in their head because they were given the wrong. It was a tool that was misused.
Right. So. Exactly. So no matter what, a position you've been in, whether you're a first time home buyer or, a seasoned buyer, still, because things change in real estate and in a mortgage, it's always best to, talk with a professional. So we would love the opportunity to talk with you. And Joe, thank you so much for sharing the information with us today. And I'll make sure your information gets out there again.
You too. Thanks for having me again, Tracy. I hope you have a great day.
You too.